Money Morning Live. Hope everyone's doing well. Enjoyed that time with Vaz, but it's time that we dive deeper into cryptocurrencies, kind of tagging along with what we were doing yesterday. And I'm talking about power profit trades with Tom Gentile. A jam-packed 30 minutes for you ahead. Let's bring in Tom in 5, 4, 3, 2.
Jam-packed is right, Eric. Welcome. Good afternoon, everybody. Welcome to Power Profit Trades. I know you heard it on every half-hour show today. I know you heard it on every hour show today. You heard it in the morning. You heard it from Vaz. You heard it from CJ. You heard it from Mark. You heard it from everybody. Even Kenny was talking about it, and that is Fed Day. So in 2 short hours, that big decision is going to happen. And of course, we're going to see some big moves. We're going to see big moves in the stock market. We're going to see big moves in cryptocurrency. I personally, if I were to lay down money on a move like this, and I never do, in terms of trying to bet one way or another with stocks or with any alternative assets, just focusing on that one day, I would say that we've been talking so bad about what's going to happen that there might be a short squeeze coming. Right, that is what everything I see is telling me. But it's, again, it's not even about today. It's about what happens tomorrow. It's about what happens on Friday and the rest of September going forward. So there's a lot that's going to be said and a lot of decisions that are going to be made based off of what happens today. Now, that's also true in cryptocurrencies. Yesterday, I was showing you support levels in Bitcoin. I was showing you support levels in Ethereum. Today, I want to dig a little bit deeper, and I want to talk about what strategies that we use to find buying opportunities in cryptocurrencies. And so I use something that I call currency waves, among others. And depending on how much time I've got, which judging by the clock is not much, I want to definitely get into currency waves and show you some ideas, the good, the bad, the ugly with it, and then how we make it better, of course. I'm going to let you know where I'm seeing the best upside in this market too. So before we get going, Eric, what's happening? I heard you this morning. You've already been up and at it on your side of the fence. What's going on?
I'm always up and at it over here, Tom. I'll tell you, I really enjoyed our session yesterday. I like talking about crypto. It's been a while. And you actually inspired me to make some moves myself. So we're going to talk about that later on in the show, which I'm excited to share with everyone. And how are you doing, though, outside of everything?
Good. Yeah, things are good, man. I'm everybody knows I'm planning my wife's 50th birthday party, and we're getting there. It's kind of, I have to include it. This is not a surprise thing. I got surprises, but planning the party.
She's got to guide you a little bit, right?
She doesn't like being surprised by anything. So it's like she's making the choices, and so we're getting down to nitty gritty, but I think it's going to be a lot of fun. So let's kind of move forward. Let's talk about what we were discussing. Yesterday I think we ended talking a little bit about Coinbase. And so before I even get into what's going on today, let's take a look at Coinbase. And so I'm popping on over, and what we're looking at here is a 100-day chart on Coinbase with the highs at 130. I mean, remember when Coinbase was at 300? And now people are saying, remember when Coinbase was at 130? And so it dropped from 130 down to as low as almost 40 in a matter of, take a look at 1, 2, 3, 4, 5, 6, 7 days. 7 days. That's a week and a half in the stock market. All right, that's a week in cryptocurrencies, but a week and a half in the stock market. That big move down really ended with the day after earnings, day or two after earnings. But look how many times we breached 50, Eric. Once, twice, 3. You could call it 3 to possibly 4 times that we breached that 50 level. And, on those breaches, we came back a little, came back a lot. And now during the June to August timeframe, this came back because, again, cryptocurrency was making a comeback too before its latest dive. Now, since then, if you remember our talks about Bitcoin yesterday, we were hitting the 19,000 level, and we're pretty much there. We're 19.2 right now, but we're not that far off of 19, right? And you look at Coinbase, and Coinbase is trading at 71, so it is quite a bit off of its lows. Does that mean that Coinbase has had a more of an up move than Bitcoin here in the last couple of months? The answer is yes. Yes, it has. It was overdone to the downside, and it is coming up. So Coinbase might make a really good bullish opportunity. But I do want to mention before we get into our strategy session that for those of you that are part of Microcurrency Trader, I'm going to show you how to take this stock, and we're going to make some no cost, all right, no cost, high probability insurance against cryptocurrencies. I do this with a few stocks, and today I'm going to do it with Coinbase. I have not done it with Coinbase yet. I'm going to wait. We're going to all do it together at the 1 o'clock show. All right. So those of you who are part of a Microcurrency Trader, you get to see how I'm hedging cryptocurrencies with stock options. Okay. Let's get into some currency waves. Now, for that, I'm going to move over, and I want to remind everybody what we were talked about the last couple of days. So we were trading down here around the 19,000 level, and we were talking about Bitcoin with support at 19, just below 19 actually, and then resistance just below 25. And then with Ethereum, I was talking again about support down or near 1,000 and resistance up near 2,000. And again, these aren't just, I mean, they're round numbers, yes. I didn't just say, 1,000's round number, 2,000's round number. No, these are technical stops, technical support, technical resistance. But let's go back to Bitcoin for a moment. So I let everyone know yesterday that I had a limit order, that I was placing limit orders into last week at 19,000, all right? Well, we hit the 19,000 level just a day or two ago. And I want to share with everybody, Eric, on this program that you can do limit orders. You can do limit orders through Coinbase, okay?
Love that.
Limit order is actually quite easy to do on Coinbase. And so what I want to share with everybody is exactly how that's done. Let's take a look at Coinbase. Here's the price of Bitcoin right now, 19,228, 227, etc. That's our real-time price on BTC USD. But where you place your orders on Coinbase is way over here on the right-hand side, all right? So on the right-hand side, I've got a buy and I've got a sell. If I don't own cryptocurrency or I own crypto and I want to buy more, it's very simple. I can go in and buy here. Now, if I went in and decided I wanted to buy $1,000 worth of Bitcoin, I would put in under here, under the total in US dollars, I could put 1,000 US dollars. And by putting it in here, it's going to show me the amount of BTC I'm going to receive, right? What I'm expected to receive for my $1,000. Now, part of that's going to be in Coinbase fees, very small amount, about 1.5%. And then the rest of it is going to be distributed to me right into my account. So that's a market order. But what I want to show you is how I do limit orders on Coinbase. All right, so a limit order will look like this. I'm going to click on limit, and then here's my limit price. Now, if my limit price is 19,000, that's what I put in USD. So limit price is at 19,000. Now, how much BTC am I going to buy? All right, for my 19,000. If you come down to total and you say, well, I want to buy $1,000 at the 19,000 limit, that's what I just did. So I bought $1,000 at the of Bitcoin if it comes back to 19. I'm not buying 1,000 at 19 right now, Eric. I'm buying 1,000 at 19,000 if we drop down to 19,000. And then it's just a matter of going in, and there's my $4 fee. So what's a $4 fee on $1,000? So a $4 fee on $100 is 4%. A $4 fee on $1,000 is 0.4%. So actually less than 0.5% on this particular trade. That's quite slim, which begs me to wonder, Eric, what does Coinbase's earnings announcement going to look like?
That's true.
They're not getting those fat fees like they used to.
No, they're not.
No. So anyway, guys, it's that simple. Is that, if I went in and I said I wanted to buy $1,000 of Bitcoin at the 19,000 level, it's going to return to me about 5/10. It looks like 0.05 BTC. Right? It's just a matter of going over here and clicking on buy and success. So when I say success, That means I did not buy it at 19,000. It's still trading. Where's Bitcoin trading at? Well, come on over and let's take a look. I blew this up for everybody to see. Bitcoin's at 19,22675. So it has to go down to 19,000, and 19,000 has to be an offer before I end up getting my $1,000 of Bitcoin at the 19,000 price. Right now, that is an open order. So I put that out there because I know there's a lot of you that are new to this, right? You watch me, you watch Nick Black. Nick's like Mr. Fundamental and knows everything about everything. I like to call myself a pattern trader. So I'm looking at price and I'm looking at charting and I'm looking at artificial intelligence to tell me when to buy. But sometimes you're coming in, maybe you're catching me halfway through a show, maybe you're catching Nick halfway through a show, and you hear some stuff coming out of us, but you don't know what to do. All right. So I just showed you how to place a limit order on Coinbase. Now, before I move into strategy session, which is not going to take long, I want to mention to everybody, Eric, and we got to get this out before the half hour is over, is that the question that came up Monday, the question that came up yesterday, and the question is probably coming up today is, I have Coinbase Pro. How do I move my Coinbase Pro to become part of Coinbase? Or more importantly, some people are saying, well, I can't do this in Coinbase. It won't let me. The only way it's going to let you is for you to deposit. All right. See that big blue button there, Eric?
I do.
Deposit. You're going to deposit money into Coinbase so that you can take advantage of the Coinbase advanced capabilities. This is the advanced trader on Coinbase. All right. If you use the basic, they're only going to let you do market orders and they're going to pull from your financial institution. But if you already have money deposited into your financial institution using that deposit key, then you've got money you have money in your Coinbase account in US dollars, and you can go and enjoy their advanced trading tools. All right. So let's talk about strategy session. And for that, I want to mention real quick, our trading mantra here at Tom's Trading Room is that we look to do a couple of things. As a pattern trader, I spot rules-based objective opportunities. An objection, when I'm looking at objective opportunity, I'm looking at something that you and I can understand. If we understand the code behind a buy signal, and we understand where that buy signal is and where those sell signals are, and we can all come up with the same conclusion, that's objective. If I say to everyone here today, I think Bitcoin's going up, so I'm going to buy it. Okay, I'm going to buy it today. I'm going to buy it at 12:14 p.m. And I just say that. Well, what happens tomorrow at 12:14 p.m. when someone's catching this as a recording? And they hear me say today at 12:14 p.m. Well, that's a different today. Next week's going to be a different today. The problem is that we're not all agreeing on something. And the other thing is that we can't quantify I think. I think is intuitive. Yeah, I think is subjective. Like I said, I think the Fed decision might spur some short squeezes today, but I don't trade off of I think. All right, I trade off of objective trading systems. We are pattern traders, so we look for patterns. And once we spot patterns, we create that alternative risk, that high probability trade, and then we just plan it from start to finish. And what I did with you, and I did with a lot of you in the workshop last week, we talked about how to do that. And I'm going to be doing that at 1 o'clock today. All right, we're going to spot a rules-based opportunity. We're going to spot a high probability opportunity today and a no-cost insurance plan for crypto. And then what we're going to do is we're going to create that, and I'm going to trade that. I'm going to let you go first, and then I'm going to come back behind you. I'm going to back run you. So I'm going to let you go first, and then I'm going to take the trade a minute or 2 minutes later, and then that way we'll be able to see what we did. We'll look at our reward, our risk. We'll look at everything. Right? That's how we trade, folks. But we use that mantra. So when we started looking at currency waves, and this is very similar to our quantum data profits, which we've been enjoying some huge successes on, we take that same information and we put that into cryptocurrency. And so we start with the very first 2 lines of code, right? And those first 2 lines of code are moving averages. They're 2 moving averages. 2 moving averages, two setups. So what are the two moving averages? The two moving averages are when we look at a long-term, short-term, and we're looking at different lengths on the same chart. All right. So different lengths on the same chart might look like this, where you see one moving average moving faster. It's moving more with the market. See, this is a candlestick chart. And then this is a moving average, and this gold one's a slower moving average. So it takes longer to catch up with the market. The faster moving average moves closer to the market. When the market turns, the faster moving average turns faster than the slower moving average, and it actually crisscrosses. And when it crisscrosses, that gives us a signal. Now, if you and I are using the same moving averages, then we're all going to get the same signal on the same asset, right? That's objective. That's where we all get the same thing. Okay, so what moving averages do I start myself off with? And by the way, this is a bullish move. When it crisscrosses, when the short crosses below the long, that's a bearish move, and then a bullish move. And it's safe to say if you use a simple moving average and nothing else, by the way, I use more, but nothing else, then you'll always be in the market, long or short. See this? This is a long signal. This is a short signal. This is a long signal. Is my red arrow, my red pointy arrow, is that causing some confusion when I have red and green on the screen, Eric? Because I can change it.
I mean, I understand what I'm looking at here.
How about that?
That's fine. If you think that makes everyone understand better, sure.
Yeah, bullish, bearish, bullish. And now you see, now this also, and we're going to talk about what this works on and what it doesn't work on. But what are we using? I'm showing you the 10 period and the 30 period, right? So when a 10 period crosses above a 30, bull. When a 10 period crosses below a 30, bear, right? If this is all there is we need to know, why do I need to talk about anything else? Well, because, and by the way, the question that I'm sure some of you are thinking is, what does this work on? It works on stocks. Works in both bull and bear markets, works on commodities, works on ETFs, and yeah, it even works on crypto, right? But here are the problems, because with any indicator that is open and available to everybody in the world, there's going to be problems. Here are the problems with simple moving averages, like SMAs. First of all, you can have feast or famine on these. You can go from having no signals to getting hundreds, depending on what asset class you're following. Now, you can also get caught in something called the chop, get caught in the choppiness. And that is a moving average is a trend trading strategy. So if you're trying to take a trade or take trades in a market that's going like this, that's just bouncing along with the small chops, you're going to get chopped up. All right. I call it death by 1,000 cuts, Eric, when I take small loss after small loss after small loss. So what can we do to cut out or to chop out some of the choppiness? A couple things we could do. What we could do is we could add stop losses in so that our stops would be smaller. The problem is that, you know what this works really well on, guys and gals? It works on volatile stocks. It works on stuff that's just absolutely going crazy, gangbusters crazy, all right? So it works on those alpha stocks, but you all know with cryptocurrency, we're dealing with probably the most volatile asset out there. I mean, if you take a look at what's happened to the S&P, all right, the Dow down double digits, the S&P down higher double digits, the NASDAQ down even higher double digits. And then you look at what's going on with Bitcoin and Ethereum, where they're down 70, 75%. It's like I'm dealing with one of those power shares triple. It's like a triple ETF because it's moving a lot like the stock market. It also moves up as fast too. We all know that. If you don't know that, go back to about this time last year. Go back to this time last year, Bitcoin was on its way up to 69,000, right? It had gone from, I want to say, the 20s, right, earlier in the year. It tripled in value. It tripled on the way up, and it gave back triple on the way down, right? It's been doing 3x the stock market. So if we're involved in something that's moving around that much, this will actually work really well. It works well on very volatile stocks. Now, we could look at stop losses. We could look at But the problem with stop losses are if you're dealing with something that's volatile, here's what's going to happen. You might get cut in a stop loss, and then it moves in your direction. If you just left things alone, it might have worked out better for you. How many of you that are watching me right now, whether you're on Money Morning Live or YouTube, how many of you in here have put a trade on and you put a tight stop loss on, and it was so tight you got stopped out of the market and you watched the trade go in your favor, and you said, oh, wow, I just put a $1 stop loss there, and now the trade's up $200, $300, $400, and I'm not enjoying it. I've done it before. So you got to make sure your stop losses are loose. You got to be loose. All right. Got to have loose stop losses when you're dealing with volatile stocks and cryptocurrency. The noise filter. Now, a noise filter is made to where we don't take every single crisscross that happens. All right. And noise filters can be additional trend filters. They can be parabolics. They can be maybe looking at the trend itself and where that market is in the trend. Is it its top 10% up, or is it its bottom 10% down? There's a number of different noise filters you can put in. We've put noise filters in, and it has allowed us to not get into every single crisscross that happens. In fact, we get into very few. All right, I'd say that adding the noise filter in cryptocurrencies reduces me down to maybe 5 to 10%, and maybe 5% of the currency wave crosses that we see happening in cryptocurrencies. Okay, so we use currency waves with an attached noise filter. So those are some things that we do. All right, and then finally, what we'll end up doing is something called layering. Now, Eric, layering in our case is that we can use levels like Fibonacci levels we talked about yesterday, but we could also layer on with something a little bit more proprietary, something that nobody else out here in Money Map, in the community, in the Money Map community or elsewise has access to. Something that we designed ourselves, something that ended up on the front pages of Stocks and Commodities magazine. We wrote the paper. We didn't give them the code. We're not that stupid. But this is something called our darknet design. And darknet is a strategy where we're actually looking at channels. And we also call that the triple stack. And that's when all of our channels line up in what we call long, medium, and short-term support. This is a good example of that. So you take a look at this chart here, and you've got 3 charts going on. You've got an uptrend, you've got a sideways trend, you've got a short downtrend. The long-term up, the medium-term sideways, and the short-term down. Now, this is one of the better-looking charts that I grabbed because they don't all look this way. In fact, some are almost impossible to see with the human eye. But what we have here are charts that are precipitation charts, parallel charts, and propulsion charts. Now, what the computer sees is this. This is that same chart. We've just broke it out a little bit more, but it shows us where those multi-layer channels are happening, and it throws buy signal or bullish signals and stop signals out. Okay, and so it is layering on top. So we layer on top, and so when I get, for instance, I get a Fibonacci ratio, Fibonacci lines that I like. All right, support resistance, and I get some currency wave crossovers with the noise filter. They're telling me we're getting bullish opportunities, and then this thing comes out here and triple stacks me with another buy. Then what that allows me to do is something called layering. Layering is what we do with our microcurrencies, and I want to make sure everybody understood that. So, we could go out and we could run a scan right now on the 1030 cross against all cryptocurrencies, and we might get a dozen, 2 dozen, or more that are going to give us buying opportunities. The problem is that includes the noise. That's what everybody's looking at. We eliminate the noise and we layer strategy on top of strategy. Right? It helps us do what we like to call the 1-inch putt. You know what the 1-inch putt is, Eric?
I don't, but you're going to fill me in.
All right, you ever golf? Are you a golfer?
I have clubs, Tom. I wouldn't call myself a golfer, but I mean, I know what a 1-inch. Yeah, I know what a 1-inch putt is, but I don't think it is what you're talking about here.
Yeah, no. I think it's exactly what it is. Is that okay. If you lay up on the green and your ball is 1 inch from the hole, you don't even have to tap it in. Your opponent's going to tap it in for you. He's going to say, all right, that's a gimme. And so, if we can layer more and more of these together, If I get all three of these all layering up together, it's like a 1-inch putt for me. Now, it doesn't happen all the time, right? But we do what we call multi-layer buys. That's part of what we do, right? So before I go any further and wrap up, Eric, you have some splaining to do.
I do have some explaining to do, actually. So it kind of takes us into crypto Q&A and the questions for me. So yesterday, Tom was talking on the show. The question actually came through in the chat regarding should he be on Coinbase Pro or on Coinbase, and Tom let us know that a ways back, he took all of his assets from Coinbase Pro, moved them over to Coinbase. So I got to thinking, I haven't been on the platform in a while. I should probably do the same thing. Take everything off of Pro, put it onto regular Coinbase, since the fees are the same now, and Coinbase is a little bit more user friendly. So
yeah, and Eric, you do it. You do you do have a lot of private stuff. I mean, I know you have a lot of private keys, and you hold a lot of stuff offline.
Oh yeah,
but you got a little Coinbase account that you want to share with everybody exactly how to do that.
Yep, exactly.
And so since you actually did it yesterday, it's fresh in your mind, so you can show everybody how to do that right now.
Exactly. So right here inside of Coinbase Pro, and like Tom said, most of my assets are staked and all that, but you're going to go over here to the withdraw button. Super easy. And when you come on over to withdraw, you could withdraw all of your portfolios at one time. You didn't have to do asset by asset. You click on all portfolios. It's already connected to your Coinbase account because you have to have a Coinbase to open up a Coinbase Pro. And all you do is click the blue button and it instantly takes all of your assets, moves them over there. And the best thing, Tom, is that it costs absolutely nothing. There were no transfer fees whatsoever. It was just super nice, super easy, super smooth, and now I'm back on Coinbase with absolutely nothing on Coinbase Pro.
Yeah, I mean, that looked, it was super simple. In fact, it was so simple, I actually forgot about it because I did it at the beginning of the year. I went back and I'm like, okay, this actually happened. I think it just happened right after the beginning of the year where they started moving everything over. And so, and moving the advanced trader stuff over to Coinbase. And so I thought, after seeing, I'm like, I looked at the commissions, I looked at everything, and I said, why do I have two of these over here? I've got so much stuff in so many different places. Consolidating one of them is just going to help me quite a bit. So anyway, guys, that pretty much, as I close out the show, I just want to mention a couple quick things. Something I want to remind everybody of is that when we're looking at cryptocurrencies or stock options, anything, this is my approach. No matter what the asset class, we trade our rules-based approach. And so it doesn't matter at the end of the day. And I defer to Nick Black when I want to know something about an NFT or some brand new coin that's popped up that he's looking at. Then guess what? He's the go-to guy. But when I'm trading patterns, I mean, I don't even need to look. I look at the pattern before I look at the coin. And I look at the pattern, and I look at the volume, and I look at the price, and then I look at the coin, right? So those of you going to be joining me at 1 o'clock, we got some coins to look at today. We're going to be looking in the crypto space. I've got a watch list, and I can tell you there's 4 or 5 brand new coins that hit the watch list. Got to talk about that at 1 o'clock. All right, so those latest setups, latest watch list, low cost, or I'm going to call it no cost insurance is what I'm looking at today. And so that'll be using our crypto stock portfolio. So for the rest of you, I got something pretty cool coming up. So Nick Black and I, we tried doing this before, and I don't know why it didn't happen. But Eric, Nick and I are going to be stepping into each other's rooms next week.
I heard this, Tom. I'm excited about it. Brandon's excited about it as well. It's going to be a great crypto explosion event that you guys are going to. It's not an event, but it's going to be fun.
A lot of people think we've never talked before.
Well, now they'll know.
I know Nick. I hung out with Nick. And we both are in the same space, but we do different things. And so what we thought was we'd combine our talents next week for a couple of shows. So I'll be teaming up with Nick next week for some crypto combo education. And yeah, we're talking, he's going to come into my room for a day. I'm going to come into his room for a day, and we're going to have some fun. So that's what we got going on next week, guys. So you'll see us both together Same time, same room next week. I'll see you then. Bye, everyone.